COSM meeting the upside that we were looking for from just yesterday. Very curious as a new product line was announced, right? So the new food supplement here, right here, you guys. So go ahead and take a look at that whenever you can and find out what those details are in the fundamentals, because here we're going to find out what the stats are saying, right? What is up, you guys? Thank you so much for stopping by. Once again, this is ARCa coming at you with a COSM technicals, raw price action, and statistical thread of analysis on this Taco Tuesday. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa Bulls. With that said, let's dive right into the charts. Okay, you guys, first of all, the very obvious thing we want to go ahead and note here is that today, with the closing candle here at $3.39, we have printed a bullish engulfing candle formation on the daily, which is absolutely bullish and suggests a continuation to the upside. Another thing that we should point out is that we have gained the outside of this of the descending triangle yet again, right? So the right angle triangle. So obtaining that upside yet again, or the outside of the triangle yet again, means that this could be the actual test for breakout, being the test number 5 that we spoke of just yesterday, right? So test number 4 usually gets that true breakout, but test number 5 also is a viable test. Okay, you guys, so today's top side that we looked at was around $3.45 before facing that rejection. Now, there are several things that are actually showing us that the rejection was in line with something, right? So first of all, let's go ahead and take a look at my algo here, the reversion variant on the, I believe it was the daily time frame. Let me go ahead and just pull that up, and yeah, there it is. Okay, so we have the daily time frame reversion variant landing right at 339, and that is exactly where we closed the candle. Okay, you guys. So another thing is that we did have a discretionary resistance level right over here, right? And that top side was very close to the to the 2 spot 618, right at $3.48, right? So we got that top side of 345. Of course, we came just shy of that 2 spot 618. It is a normal retracement, right? Because it is a golden mean. It is very likely that we would face some resistance from those zones. Okay, you guys. So it is looking very positive for the asset thus far. Okay, you guys. So now, yeah, as far as the time fractals here, it's very curious actually that it would want to make an upside now that we are actually getting this the read that of a potential 14-day, just a consecutive 14-day iterations, right, for the next pivot, right? So that's not to say that it's not to the downside. I'm just saying that it's curious that we're getting an upside now with a good news catalyst, by the way. Okay, so now going back to this chart here, this is where I would like to express what we're actually facing here, because the signal for, let's see, the signal for the 8-hour volatility versus momentum backtest has essentially fired. Okay, so, and I believe it fired at the opening of this 8-hour candle right over here. Now, before I continue, there is a lot of confusion over why the targets don't meet. And now it's not that they don't meet, is that statistically speaking, we have an average move based on a series of conditions. Okay, so that doesn't mean that we're going to go directly to the target that the statistics are suggesting. It does happen. It happens very often, actually, but it doesn't have to happen. So the beauty of this backtest is that upon a certain criteria, so in this case, it is from critical contraction of volatility. This is volatility represented by this indicator BBWP, right? So upon the contraction levels and the expansion, particularly beyond the 15th percentile, paired with an upside pivot with stochastic momentum, that has led to several iterations, historically speaking, right? So actually, I'm going to, sorry, let me just go ahead and go to the actual chart where I do have that 8-hour backtest. Here it is. Okay, so this is that backtest, right? So you can see here that there are several iterations throughout the entire trading history of the asset, right? So, and just to be very, very clear to show you exactly how I measure it, right? Any iteration, we'll just go to any random one. So what I tend to do is I go from the opening to the from the opening of the candle, or the 8-hour iteration, to the range high, or it would be upon the validation of crossing upside of the 15th percentile of volatility until we reach the highest high of that iteration, right? So in this case, I did have a critical exception here, that we maintained ourselves within critical expansion here, and then I favored closing on this side, and that's very particular. The reason why I didn't close upon reaching the opposition here is because we still had a massive upside continuation and momentum, thus increasing the chances of continuing to the upside even beyond the invalidation zone. So anytime that we are starting to expand from contraction, I have taken note of every iteration where we've actually started that upside paired with an upside pivot of stochastic momentum, and I've measured just like this. Please notice here, we'll go ahead and take a look at this iteration here. This candle, you can see it opening right here from O, right? So O, you can see that it's opening at 462. Let's highlight this thing right here, 462, right? And now this candle here has a top side of, you can see on the high right over here for H, right? So let's go to that H and see 725. Okay, so we have 727 here. Sometimes, you guys, that varies, right? We can just bring it down ever so slightly. That's not going to do anything to the volatility test, right? So this is essentially how I take the back test, right? So it changed literally point something percent right over here, right? So it's not going to do anything to the stats when we're looking at iterations that do have 60% moves, 39% moves. We have 43% moves over here, and we do have a little bit of an outlier over here with 1,062% to the upside, right? So all of that criteria is gathered together as a sample set to create a data set. Okay, so now out of 9 iterations, 6 were guessed correctly to the upside, and 3 were guessed incorrectly. Okay, that gives us a 66.66% upside accuracy. Okay, so that upside thrust on average gives us a move that's about 206% to the upside. On average. That doesn't mean that upon the firing of the signal, we're gonna go 206% up. We have to look at the relevant areas of resistance, the relevant areas of moving averages above us. What do we have? There's a lot of metrics to kind of take into account here. For example, the 8-hour time frame, SMA 100 is located at 387, right? That's very likely going to be a resistance that we're going to face. And if it's strong enough, that can actually lead the price action back down and not have it continue to meet the mean. But it's still a mean, okay? So it's 206.895% to the upside, and with an average duration of just over 6 days. Okay, you guys, so now the 206% mean does have a standard deviation of 382.87%. So the standard deviation is, for those of you who are math able, this is actually the bell curve, right? So the bell curve represents the center area, which has 68% of the results. So 68% of the results, 382% to the upside land within that, right? So, I mean, see what I mean? There's a lot of targets to take a note of, right? So now, as far as the upper bound of the first standard deviation, there is the highest target that we can face is 589% to the upside, right? So, I mean, again, it's not saying that it's going there. I'm just telling you that it's statistically backed that it's going to make a move on average that could be this. But notice that historically speaking, we have a 15%, a 39%, a 43%. There's a bunch of different numbers there. This is a calculation on historical data. Okay, so do not take the targets that I'm taking as the final answer here. Okay, you guys, we have to understand that these are statistics. They are not certainties. Nothing at all in the market is certain. Okay, you guys, the only thing certain in the market is change, and that is never going to change because it is a constant. Okay, you guys, so now that we know those probabilities, the signal fired. We have an upside pivot on the EMA3 and the SMA14, and that pivot fired on this present 8-hour candle from today. Okay, so this would be that candle right over here, right? So the opening of this candle is $3.32, which is then where we start measuring, right? So $3.32 right from here, then we start measuring the upside, right? So of course, 206% doesn't sound so real at this very moment, but it's because it's on average, okay? So we have to look at our relevant resistances as we move up the time frames, right? Up every day. Okay, so 206% would take us to around $10.18. Again, I'm not saying that we're going there. I am saying that on average, we can get that move, okay, based on the certain conditions that we are looking at here. Okay, you guys, so again, we have a resistance on the 8-hour time frame at $3.87. Okay, you guys, which is very, very likely a range of $3.99 through $3.87. It's on the 8-hour chart. So every single candle here takes 8 hours to reach. So notice here from this candle here to this here, it took 8:16. Guys, that's a bunch of 8-hour candles, meaning more than 1 day, meaning more than 2 days, 3 days to reach from here to this area here. Let's just go ahead and take a quick measurement, right? So that right there took 6 days and 16 hours. Okay, and now why is that so familiar? Even in this iteration here from cycles, 6 days and 16 hours. Okay, so I'm really giving you statistics here based on historical data. Okay, you guys, that's all we have to really that is all that we really have to take into account here. Okay, you guys? I'm not sure what just happened right now. I noticed that I got a blink right there. Am I still recording? It looks like we're still recording. All right, we're good. We're good to go. So now let's go ahead and continue on the analysis here and see the RSI, which would be the last part of the analysis. Okay, you guys? So 30-minute immediate short-term time frame, finding that upside. We're sitting in the gravitational zone of the bull weakness percentile. Very likely for this to continue on to the upside, and the bi-hourly too. So now, speaking of the 4-hour and the well, the 8-hour has a little bit of resistance here, which is very likely going to be that SMA 200 if we can make that move to 380. Right, but as we start to see these cascading time frames from the RSI, the likelihood of this bleeding into the 8-hour becomes greater and greater. Okay, so now looking at the 12-hour, there appears to be a little bit of resistance here. Again, that could be indicative of that 387 top, right where the 8-hour SMA 200 is located, right? So again, if we start getting all of these time frames with an upside pivot and start crossing above the SMA 14 represented by that pink line, the likelihood of these cascading into the larger time frames where it really counts is going to start becoming a bigger and bigger probability, right? So now this is the daily time frame about to cross that SMA 14, and now look at this, the 3-day time frame being affected. We found that support from that SMA 14, and now it's continuing to the upside. Similar situation here on the 5-day time frame, right? We just have to get those smaller time frames to really adjust, right? One more thing that we want to take a look at here is, in fact, in the daily time frame. So let me go ahead and just block out the visibility from the Gaussian channel. As you can see, we're facing on the Gaussian channel that resistance right at the mean band. We're knocking at the door. Of course, we're going to get a retracement from there. Okay, you guys, and that mean band was located right at 347. Very, very similar target from where the two spot 618, I believe it was here. From where the 2 spot 618 is located, right? 348, we have that Fibonacci retracement level, and of course on that the mean band of the daily, we have it right at 347, right? So literally a cent off. So it is normal for us to face this type of retracement, right? You guys, it looks great. We have a good news catalyst. Price action is finally breaking out of that triangle, and that triangle does have a price objective too, right? So the triangle does have several price objectives to look at. All right, you guys, but that's not what we're looking at. We want to take a look at this, okay? Oh, man, you know what? It's okay that we see it on this. It's a little there's a lot of things going on here, but I can just pull them up. So what you're looking at here is the orange and the yellow line representing the 21 and the 55 exponential moving averages, okay, you guys? So the shorter time frame moving average, which is the yellow line, the 21, is getting very close. It's starting to contract very close into that 55 exponential. What that means is that the asset is starting to prepare for a silver cross. Okay, so silver crosses for this asset are absolutely looked at as bullish. Here's a silver cross right over here, price action to the upside, right? So, and historically speaking, I mean, here's another one right here, price action to the upside, right? So, yeah, I mean, you know what I'm talking about, right? Here's another cross right here, price action went to the upside, right? And finally, we got that overall cross right over here of the shorter time frame period. Remember, the shorter time frame over the slower time frame. So 21 over the 55 crosses here, price action continues on and on and on to the upside, right? So that's typically what happens upon these crosses. Another one right over here, price action to the upside. And yeah, so this is essentially what I wanted to talk to you about, right? So another one right over here in price action led for a significant upside there too. Okay, you guys, so there is something to kind of look forward to here in the charts too, as the moving averages are starting to converge, and they're absolutely meeting each other. The distance between them right now, currently speaking right now, is literally about 3.89% away from each other. So that is extremely close, and that could present a very bullish case for this asset, as it looks like it's starting to prepare for that potential upside. Okay, you guys, so I think this is a pretty good place to leave off right now. If you have any questions or concerns, definitely you know where to reach me, okay, you guys? But with that said, actually, first and foremost, remember that I am not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Okay, you guys, I need you to do your own due diligence, and everything will be cool. But with that said, now, I wish you well, a very good night, and I will catch you at the bell mañana. Adios.